Good afternoon, ladies and gentlemen. I'd like to welcome you to yet another investor update. I'm your host, Dan Theok, Senior Vice President of Investment Banking here at Mayberry Investments Limited. Joining us today is the Executive Chairman of Mayberry Jamaica Equities Limited, Christopher Berry, and Gary Peart, Asset Manager for MJE. Today we'll be bringing you exciting Q3 updates on Mayberry Jamaica Equities Limited results to September 30th, 2022. There'll be a Q&A segment at the end of the program, so please stick around to put in your questions and answers. Additionally, please remember to subscribe and hit the like button and the notification button if you'd like to receive updates like this every week and know when we go live. Before we get started, I'd like to take this moment to remind you that if you're looking to expand your investment portfolio and embark on your very first investment journey, Mayberry can place you on track to financial freedom. Follow us on social media at Mayberry INVJA to learn more. Now let's get right into the discussions on Mayberry Jamaican equities. But first, let me welcome Gary Peart. Welcome, Gary.
Thanks, Dan. Hi, everybody.
And online, let me welcome the Executive Chairman of MJE, Christopher Berry. Welcome, Mr. Berry.
Welcome, Dan. Welcome, everyone.
Great. Thanks for being with us. Now let's get right into the presentation for today. Good deal. On the first slide, guys, we want to talk about the growth in Mayberry's results, and it's a whopping 539% growth in the EPS, 119% growth in the comprehensive income, 33% growth in total assets year over year. So that's September 2020 compared to September 2022, beg your pardon, compared to September 2021. Total equities for that same comparable period also up by 39%, up to now $18.9 billion, coming from $13.68 billion. And we see also the net book per share up 39% to $15.70, and the closing share price now up to $13.20, up 52% from a year ago. Next slide, just want to show you what's going on with the 9-month results. Hopefully you can see it. If you can't, just trust me with the words and pull up the report yourself on the GST today. For the 9 months results to September 2022, our net operating income is up to $4.4 billion. That's a 472% increase over $768 million the year before. The net profit for the period is now up to $4.1 billion for this 9-month period compared to $647 million before. So that's also up by 539%. Total comprehensive income now at $3.958 billion for the period compared to $1.8 billion. That's 119% increase we talked about earlier. Despite that spectacular performance for the 9-month period, we did have a pullback in the last quarter of this 9-month period where, in fact, the total comprehensive income showed a loss of $2.7 billion. So in the quarter, there was a pullback, and we'll talk a little bit about that. And that's obviously because of the continued increase in interest rates and the fact that we've seen PE ratios in the market generally pulling back. But despite that, the performance is still up by an impressive $5 billion year to date. So still very good results in the 3 quarters year to date. Next slide. Just want to focus on changes in the financial position and the fact that total assets are now up to $22.8 billion, again, 33% higher than it was a year ago, and shareholders' equity up to $18.85 billion, 38% higher than it was a year ago. We closed the December year-end audit with shareholders' equity of about $5 billion. So even in the year to date, we've still seen about $3.8 billion growth net, despite the pullback that I mentioned in this most recent last quarter. Taking a look at the composition of the portfolio, we know a lot of folks like to know about the top 10 portfolio and what we have in it. Not many changes from a year ago, led primarily by Supreme Ventures, CPJ, and JMB. These are sort of the top 10 shares in the portfolio by performance. And, we look to see continued growth in the portfolio across the top 10, which are all very strategic. I do want to make a special note of Jim Cabrales Group in particular, which we really are betting big on, and we're expecting bigger and better things from JPG. All of the top 10, frankly, even Grace Kennedy, where we've seen a little pullback recently in the share price. This was as high as $100. All of these companies are still very solid companies. And when we get to the Q&A, I'll definitely be asking Chairman and Mr. Peart a little bit about this top 10 and how they came to the selection and, what can we expect for the future. Next slide shows top 5 additions and top 5 disposals. So in terms of the top 5 additions, I really think the only thing new really is I think Dollar Financials. That's the recent IPO, and you can see that MJE got in early on that and got themselves some Dollar Financials. Other than that, I think we just continue to add more to the portfolio for JBG and JMB, which were in the top 10 previously. What we see here is obviously the asset managers investing more in these two in particular, pretty deep in JPG, $85 million of investment, and similarly in JMB. And so we'll talk a little bit about that. In the top 5 disposals, nothing surprising there either. You can see them turning over the portfolio a little bit, selling a little bit of Wigton, notably selling about $30 million of carved cement. I'll definitely have a question for Chairman Peart on that, see if we can get some insights on that. But no surprises for me, generally speaking. And then after all of that, when you look at what makes up the 10 largest stocks in this, $28 billion portfolio, we see Supreme Ventures makes up about 58% of that portfolio. So they've put a little bit more in on SVL. CPJ is up to 12.9%. And I think just by virtue of the tremendous growth in that stock price in the last year, I suspect that alone has moved up its proportion of the total portfolio. But again, nothing new in the top 10 really compared to what we saw last year. But I know a lot of folks like to know what's happening at MJE and like to please, and so we like to share that information. Next slide shows the look of the portfolio in terms of the net book value or the NAV. And, again, you're seeing good growth in the NAV from $11.34 to $15.70. So that's about 30% growth in the NAV. So the asset values of the portfolio divided by the number of shares is how we calculate the NAV or the net book value. And it's a good way to see how the portfolio is performing vis-a-vis the stock price. And we'll look at the stock price on the next slide. The actual changes in the stock price, you see where the market was as high as $15.70 and it's now down to $13.20. Is just a bit of market dynamics, maybe some market perception, but I think the NAV is very important for this type of portfolio because it is a portfolio of equities, and the sum of the value of those equities really is what drives the total portfolio value. And we're long-term investors in the market, and what we're really interested in is the value of the equities that we own in the portfolio, which ultimately should translate into the value of our fund itself. And on the next slide, we can see a little bit of an anomaly between what the NAV is in blue, i.e. the sum total of all of the assets we have invested, the net assets that is, divided by our total shares, and we call that the NAV, versus the share price. And there's no logical reason why the share price should be trading at a discount to the NAV. And we see throughout this graph, in most of the instances, we can see a difference between the NAV and the share price. And that, to me, signals a good opportunity for wise investors to go and buy MJE. You want to buy the stock when the share price is below the NAV because ultimately, as the market gets more mature and sophisticated, we expect the share price to trade closer to the NAV. That's just, basic investment 101, quite frankly. But again, in our market, we tend to see some lags and some anomalies from time to time. So that's it for the presentation. Again, I remind you guys to come in with your questions. We'll be happy to entertain them. I'm going to kick off 2 or 3 to our asset managers and then read a few from the fund. So first up, Mr. Perry, first one for you is we've seen a general pullback in the market over the last 3 months, presumably due to high interest rates. We've seen the main market average PE come down from about 14 times a year ago to now 10 times. What's your general feel about the pullback that we've seen in the last quarter and your expectations over the next two, three, 4 quarters?
Thanks, Dan. It's expected. There's an inverse relationship to the direction of interest rates and the PE multiple. And so what we've seen is that the market benefited significantly from relatively low interest rates. So the market PEs grew over that period. Now we're seeing a reversal of interest rates, meaning they're going higher. So you'd expect the PEs to adjust downward. Also, you have companies that are coming out of COVID, and some of their results aren't as great as you would expect. So it's always good to see the market pull back because trees don't grow through the sky. It's obviously an opportunity to reset, take advantage of some of the pullback in certain stocks. We've seen where certain shares have been pretty resilient. For example, Supreme Ventures, which I think the MJE portfolio benefits from, because the price is still pretty high. I think that's more a function of the expectation of what is potentially out there to happen where that company is concerned. Also, it's one of the higher dividend paying stocks. So, the expectation and something we've spoken about when we're putting together the portfolio of MJE. You want certain stocks that can give you capital growth, and then stocks that can also give you dividend growth. And that's one of the reasons an SVL is a big portion of MJE because it gives you both. It's a company that does well in a recession. It's a company that does even better in a growing environment. And it's a company that has capital appreciation and dividends. So that has done well. You're going to see shares like Carreras, who's typically a strong dividend payer. As interest rates start to increase, their stock of cash is going to throw off more interest income, and ultimately is going to push that stock price. And also, people are going to focus on the dividends from that company. So, in short, it's expected. You want the market to pull back. It's an opportunity to reset and get better opportunities that you see out there. And I think over the next 3 to 6 months, it's a good opportunity to get into stocks like JMB. That's just an amazing buy. Last year we thought it was a great buy at 37. It's a much better buy at 38 because the results have gotten even better.
Absolutely.
So it's a huge opportunity. It's one of the biggest screaming buys in our marketplace. In terms of the outlook, as we have been indicating, we expected this increase in interest rates. It has been driven by inflation. From my perspective, what the research shows is that a lot of the inflation, the genesis of it, were high shipping rates, freight rates. You saw where to move a container moved from $3,000 to 20 odd $1,000 in the space of a couple months last year. And we're now seeing where those rates are coming down significantly. So whilst it was the genesis of the increase in inflation, it could be the genesis of the reduction in inflation. So as such, we expect to see interest rates start to temper, certainly by the March quarter. And in a lot of instances, you might see where interest rates have started to trend down. But certainly towards the back end of next year, going into 2024, we expect to see either interest rates stay at the same level or come off somewhat. And I think positioning ourselves so that now is going to be a good thing, not just for MJE, but obviously the average investor out there.
Thank you for that.
Yeah.
And our expectation, obviously, is as those interest rates have peaked or start to come back down, the market will perceive that and we'll see PE ratios flying again. So I agree with Mr. Perrott. It's a great time to be investing. There's some definite buys out there screaming out at you. JMB for sure is one of them with a PE of less than 7 times in a main market where the average is 10 times and probably trending back to 12 times in the next year. I now appreciate why in our top 5 additions for the period, we see $81 million purchased in relation to JMMB. Chairman Berry, next question is to you. The next top 5 purchase was Jamaica Brothers Group. Tell us a little bit about why you've bought $85 million more of Jamaica Brothers Group. What are you seeing? What are you expecting? Why do you look like you're bullish on JBG?
Yeah, well, there are two main reasons. So the first reason is that broilers tends to do better whenever you have a lot of inflation because the price of other protein tends to rise faster than the price of chicken. Um, it isn't always that way, but it tends to be that way in Jamaica over a long period of time. The second reason I like broilers is that I would say most companies in Jamaica are capped by the local economy. We have seen where Jamaica broilers has been expanding in the US, and that market, just in number of people, is more than 100 times the size of the Jamaican market. In terms of consumption, I mean, I've never done that calculation, but I mean, the US is the biggest economy in the world. So, I mean, you don't really need to do the math. So I think Jamaican broilers, having shown that they can make money abroad, could be in the beginning of really a massive growth cycle.
Absolutely. Couldn't agree with you more. And when we talk about the growth potential of Jamaica broilers, it's the fact that 40% of their income now comes from North America. And then we see in other regions where they have not done so well, Haiti in particular, where they've now signaled the intention to exit. So I think Jamaica Broilers Group at $30 is a steal. I think that PE is about 9 times. We saw them recently reducing prices before the results came out. Then you saw the fantastic results. I have no doubt that that's a stock that's going to do exceptionally well in the next 6, 9, 12 months. And I think that's a great buy on the part of MJE. So it's good to see uh, two moves there that obviously make good sense to me. Mr. Parrott, the growth in the MJE fund is really unprecedented. This is a fund that was maybe $10 billion 3, 4 years ago. Now you guys are up to 25, $27 billion. Really impressive growth, but you really have such little debt. 27 billion in assets and only $3 billion of debt. Just talk to me a little bit about the potential for further growth in MJE. Where could this thing be in 2, 3, 4 years, and why should people go and buy some MJE?
You know, so I throw that first question out to David Rose. David was asking about the $2 billion in debt that we had. So against a backdrop of 25 billion in assets, that's what, 10%.
Yep.
So leverage is pretty low. The growth has been great, and the second point I'll make is that Mayberry has always been high in Jamaica. We've always said it, and more importantly, we've always indicated that the stock market is a huge opportunity for people to make money. And this massive growth that you've seen has come from investing in the stock market. And, it's not just a place where you can invest for a year, try to get 200%, run away and come back in another 10 years. Consistent investing, will give you these kind of returns. That said, we believe Jamaica is in a purple patch. So we've seen significant growth pre-COVID. We're one of the few countries that navigated COVID pretty well. And coming out of COVID, we're seeing where we're getting back on that expansion platform. I mean, we have several hotels that are being built. The tourism product is still in its nascent state. People don't appreciate that. There is significantly more growth that can come from tourism. Real estate prices, when you compare it to other Caribbean markets, are still relatively low. So there's a lot of growth that can come from Jamaica. So if we're navigating, COVID, the fiscal issues pretty well, the reduction that we feel we'll see in interest rates in another 18 months, again, that augurs pretty well. And we think one of the first places you're going to see that growth continue and expand is the market. So even though we have had significant growth over the last couple of years, knock on wood, we don't have any serious hurricanes or infrastructural issues. We think that Jamaica has significantly more growth, and we believe a lot of that growth is going to manifest itself in the Jamaica Stock Exchange. And as such, that's why you buy MJE, because we've certainly demonstrated over the last 5 years that we can mine that growth, and we believe again, as I've said, that there's more growth to come. So if you don't want the stress, just buy MJE.
Thanks for that. And specifically on the leverage, David Rose asks, will MJE leverage more of its portfolio to invest in the market, which is seeing a reduction in liquidity as larger investors shift to fixed income?
So again, the beautiful thing about the stock exchange, certainly for us, is it doesn't matter how high the podium we scale and shout to the world that this is where you need to invest. You still have a lot of people that just don't believe in it, and that's fine. We'll just continue to invest more money and make more money on it. So, we have found that time in the market is almost an impossibility, but it's sexy. Everybody watches and here's a day trader, and you come in just before the market moves. But what you will find is that all the studies show that you extract value and create a lot of wealth by positioning at the right time. So it's not necessarily market timing in that you can get in just before it jumps $30 and then you sell as soon as it jumps out and things. So when you're going in and out of the market, that's when you run the risk of missing significant moves, because things happen. And what you need to appreciate is that when things happen and the news is available to all, it's very unlikely that somebody's going to sell that position. So to benefit from significant wealth in the market, especially the JSE, you have to be in there, you have to be positioned. So that investor that, converts US, get into J, buy some stock, then sell the stock after 10%, go back into interest income, and then hoping to get back in when the market moves again, you'll probably miss 20, 30, 40, 50% of that move. And, historical studies, certainly in Jamaica, show that across the three key asset types that the Jamaican investor loves, the three key asset types being fixed income, real estate, and the stock market, it shows that the stock market significantly outperforms the other two. The third being obviously the devaluation and the foreign exchange risk, meaning going back and forth from J to US dollars. And the historical studies show that investing in the stock market in Jamaica is the place to be. It gives you the most superior returns. But again, at the end of the day, it shows that this is where you need to be. If people still don't want to be there, we'll be here. And we'll continue to make that money. And, again, we've made it easy for you. By MJE, you don't have to sit down and watch it every day because, Chris Mark and myself will do that for you. And, we started this portfolio basically in 2007 with approximately 10 million Jamaican at the time, 10 million US at the time. And it's now worth in excess of 100 million US. And we continue and expect that growth to continue. Will it be massive growth every year? Maybe, maybe not. Will it be gradual growth over time? Probably. But, this is a place to be. MJE, by MJE.
Thanks for that. Now, Chairman Berry, I started my investment journey 6 years ago when you and I had a dinner meeting, and I have no regrets. And I remember very clearly, but I want you to sort of repeat it. At the time I was big in real estate, U.S. bonds, and I dibbled a little bit in equities. And I thought to myself, it really doesn't get better than U.S. bonds earning you 10, 11, 12%, and real estate. But you were a big equities guy, and you've been that way for a long time. You've been at it for 30 years. I mean, tell me a little bit more again why you believe so much in equities, in Jamaican equities. When a lot of people scoffed at the Jamaican stock market, you were sort of first mover. You were there. You were investing in equities big time. Tell us a little bit about your 30-year journey and why you're such a big fan of equities. Not hearing you, Chairman.
Well, we actually started in equities. I mean, when we first came to the market, our first license was as a stockbroker. And we did that because, my dad was doing that from the 60s when the stock market started. And we decided to make it into a business. So what I found over the years is that when you look at equities versus debt, and especially in recent times before the hike in interest rates, you know, quality fixed income instruments are yielding between, maybe 2 to 4%. And I've seen many A-rated securities go from A-rated to junk. So think about it like this. If you have 5 securities in your portfolio and one of them goes from A-rated to junk, you might lose 70% of your money in that one security, or 100%. But let's say you get back 30 cents on the dollar or 50 cents on the dollar. So your portfolio is now down by 10%, but you're only earning 3 to 4% per annum. So it's gonna take you some time to make that back. Whereas if you have a portfolio of equities, same 5 equities, to make 10% in an equity is easy, and you're gonna get a bad result. You're gonna see the company going bad. You're gonna have time to sell. Yes, you can still have the same 50% loss on one of your stocks, but the other 4 will make it up in a very short time. So I think on a risk-adjusted basis, my experience is that investing in equities is actually safer than investing in debt. Plus, you get a much higher return, and that's why I like it. And in terms of Jamaica, why Jamaica? So I have personally foreign equities in my personal portfolio, but I wouldn't say I'm an expert in international equities. I think being in Jamaica all of my life, and Gary and I and Mark, and we're living here in Jamaica, and we know what's going on here. It puts us in a very good position to know what to invest in Jamaica. And then we get the added benefit of investing in Jamaica and watching Jamaica grow. And as a Jamaican, that's very pleasing to me. So, the funnest part of my job, I think, is helping the small companies to raise capital, because who knows, in 100 years' time, some of these small companies that we're funding today will be the Grace Kennedys of the future and be the stalwarts that really make the pillars of Jamaica's financial and corporate sector strong. So that's basically why I do it, and it's worked out pretty good, and I think it's going to get even better.
Absolutely. Thank you for that, Chairman. Appreciate that. Okay, going over to the questions out in social media. Let me start with Devlin, whose question I think I'll point towards Gary Parrott. He's saying the SVL dividend continues to be a major revenue stream for MJE. Can we see continued increases in the SVL position over the next few quarters?
I don't know if I'm getting that as the asset manager, as the executive chairman of SVL, but what I can say to you, and I've alluded to it initially, SVL is an anchor investment in MJ's portfolio for a variety of different reasons. As indicated, capital appreciation will come from increased earnings. We think the potential of SVL is vast. It is huge. And that potential expanded significantly with their latest announcement that, they now have a proprietary lottery software that is internationally certified. So, a lot of people on more sophisticated exchanges, the stock price would have taken off. But it's clear that a lot of people locally don't really understand what that means in terms of the potential for expansion for SVL, which simply means as a lottery operator, usually you take on a technical service provider that would provide your lottery software. So, which is what the structure for SVL in Jamaica is. Their technical provider is IGT, one of SVL's long-standing partners, one of the largest technical services providers and overall gaming companies in the world. And, with this new software that is proprietary, it allows SVL to become one of, if not the only operator and technical service advisor in the world. So SVL can now have the opportunity to bid on lottery tenders, projects right across the world. And if you put it into perspective, and this is public information, SVL pays its technical service advisor anywhere between 12 to 15 million US dollars per annum. So if you were to do a future cash flow discount that, you can get an idea as to what one potential bid could add to the value of Supreme. Can you imagine if they get two or three such things? So that's huge in terms of potential. The dividend is there. They have a dividend policy that speaks to a 90% payout of dividend, and again, that's huge for the shareholders of SVL. It helps the MJE's portfolio in that it gives MJE significant cash flow, and obviously that's the cash flow that helps to service the debt, the relatively low debt that it has. So as SVL continues, just like any other companies, there'll be ups, there'll be downs. Preparing for certain things, you might see dips in earnings, but the long-term potential remains extremely strong. And as I've said to people, do you want to be sitting on the sideline trying to time the stock, and then you just hear of an announcement, and that announcement immediately all shares dry up because they want higher prices. And we think that's the potential of SVL, and if SVL can take on 10 to 15% of its potential, that value is huge, because it's technically already a global company, right? A lot of people are not aware. It has a business in Guyana. It has a business in South Africa. They're not yet huge revenue earners for the company, but it's a global footprint. As you take on additional businesses across the globe, that whole mindset, etc., changes, and the ability to earn revenue changes. So I think it's an important key point for MJE. And I think as Supreme expands, so will the value of MJE.
Thanks for that, Gary. Appreciate this. Another question coming in. I'll direct this to Chairman. It says MJE has a cash pile of $300 million. Do you see an opportunity to capitalize on the decline in some main market stocks?
Yes, definitely. We like to buy when the prices get low, and we've been buying, broilers and JMB. Those look pretty cheap. But you have to be patient because I don't know how long the interest rate hikes will last, and I think while the interest rates hikes go on, the prices, all things being equal, will keep falling. So, things are very different from the last time we saw this. Was when Volcker was trying to kill off interest rates kill off inflation with interest rates, sorry. And it took him 3 years. So the whole situation is very different now. I don't think it will take 3 years. But I don't know how long it's going to take before we see the Fed stop tightening. And I think once the Fed is tightening, I think the BOJ is going to be in lockstep with the Fed. And so we're going to be buying, but we're not going to be loading up at one time. We're going to, as Gary says, take our time and get the buys, get the good buys.
Great. One more for you, Chairman. Someone's asking, will you continue to buy more dollar financials, and will you continue selling more Carib cement?
So for Carib cement, I have a fundamental issue with Carib cement. I think their position, the board's position with the minority shareholders, is tantamount to highway robbery. I've said this before, and my position hasn't changed. So I find it difficult to partner with people that I feel is robbing me. So I have no option but to exit cement company, because I can't partner with people who I think are treating me unfairly. However, what I'm seeing there is huge commitments for new hotel rooms, huge commitments for increased infrastructure across Jamaica. I see the demand for cement going up and in the right direction, as my friend from the Gordon House would have said many times. So, the thing is, I'm not going to give away our cement, but I'm definitely not staying in. Um, so that's cement. Which was the other one you asked about that?
Dollar Financials. Will you continue to buy more of Dollar Financials?
So Dollar Financial has an execution framework, and my thing is with these younger companies is that I like to see execution is the hardest part of every business, and I think Dollar has a lot of great ideas, and for me, I want to see how they execute against their idea set, and as they execute and keep improving their execution, then we will definitely increase our investments based on what we see. But we want to see how good they are at executing.
Thanks for that, Chairman. And Devin says, so Gary, I take it that it means MJE will continue to buy SVL. And that's not what he said, Devin. I think what he said is the stock has huge potential. I'll tell you, it's the second best dividend paying stock on the market, and it now makes up 58% of our portfolio. So we certainly like SVL. Whether we buy more or not remains to be seen.
Well, if I could add,
Sure.
if you actually look on the analysis, it's not that we have bought significantly more SVL or materially more SVL. I think it's a case where most of the other shares in the portfolio have retreated faster than SVL has retreated. And I think that's why you've seen SVL move from 49% of the portfolio to 58% currently. But the fundamentals are indeed there. We're a big player, and there are different ways in which we will extract value. And I think it's appropriate to remind people that the management fees for that is charged to MJE is one of the lowest, if not the lowest, in the entire market of Jamaica and maybe across the world. And so, for example, the incentive fees are only charged when we have made new highs in terms of the portfolio. So for the quarter that has just passed, it is likely that the incentive fee will be zero because the value of the portfolio has indeed come off. The asset management fee, which is based on the size of the portfolio, again, it is one of the lowest in the marketplace. And I challenge the other equity funds out there to go lower than what we are. So that's another big reason to invest in MJE. Not only are we giving outsized returns, but the fees that are charged to the portfolio, is one of the lowest, if not the lowest, in the environment. So.
Well, thanks for that. And I think with that, I just again want to remind you guys, go and look at the results, do your own deep dive. But for the 9-month period to September, you see earnings of $4.1 billion, which is up by 539% over the comparable period last year. Although we did see a dip in the most recent quarter, the company's total assets now up to $22.8 billion, only carrying $3 billion of debt. MJ is definitely going places, and I encourage you to stay tuned to see what happens in the next quarter. Before I close out, Chairman, any last thoughts from you or last comments?
You're muted.
My last comment would be by MJE.
Excellent.
On the stock to own.
Excellent. I couldn't agree with you more. And if you, again, look at the slide of where the share price is relative to the NAV, if you bought MJE today, you'd be getting it at a 15% discount to the NAV. And again, that NAV, you're going to see that increasing by 15 to 20%, in my view, in the next 6 to 9 months as interest rates peak and the market's perception of those increases end. So whether the rates hikes end in 3 months or 6 months, I don't think matters. I think in 6 to 9 months' time, we'll have certainty that the end is near. Confidence will come back. PEs are going to trend back up, and the value of the portfolio is just going to fly again. So, great opportunities out there to buy MJE, JMB, Jamaica Brothers Group. If you're not sure what to do, feel free to call us at Mayberry Investments Limited. We're investment advisors, and we're happy to build portfolios for clients. We're happy to direct you into the MJE portfolio. Lots of opportunities out there. We encourage you to start investing today. That's the key. As Gary said, don't stay on the sidelines waiting to time the market. You want to get in the market today. It's a great time to be investing in Jamaica. Uh, don't be lazy and wait on the IPOs only. Make long-term commitments in the stock market, and you will see that this is the best performing asset class by far. Real estate prices, you have to be careful right now, and you can't buy $1 million of real estate easily. You can buy $1 million worth of equities quite easily. So we encourage you guys to get out there, start investing today, and contact us at Mayberry Investments Limited if you need some advice about building a portfolio. So to our viewers, thank you all for being a part of today's investor update. I'd also like to thank my fellow panelists, Chairman Christopher Berry and Gary Peart, the asset manager for MJE, for your invaluable contributions towards today's discussions. As always, I'd like to thank you and ask you to keep up to date with all things firm related. To please check us out on social media. Don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Thank you all for tuning in today. We really appreciate you. And remember, wise investors, slow and steady wins the race. Keep safe.